Hi, hello. Here we are, episode 17.
Fully mic'd, ready to go.
We have our mics on and everything. We recorded a great intro. It was so good. No, you're not missing anything. It was exactly what we're saying now. Episode 17. I cannot believe how many episodes we've done. It's awesome. We are on a roll. Thank you for listening if you've been listening since the beginning. And if you're just joining us, what a great episode to start with. Because we are going to be talking about buying a home in 2025, which sounds like a general statement, but we're really going to be focusing on kind of like the buyer consultation and the 101 of buying a home. We've touched on this from the beginning, but it is always a great reminder because we are constantly doing buyer consultations with our prospective clients.
I think when I talk to my clients, the biggest concern is that this is something that's not feasible for them. I get into so many conversations with people who say, I'm waiting for the housing market to crash, or I'm waiting for interest rates to go down. And they fall into the vast majority of people who are doing the same thing. So if you are looking to buy a house in 2025, one of the upsides to that is that you don't have nearly as much competition as you would if you wait until things are a little bit more favorable. The more competition, the higher the price point. So it really evens out in the end. And it's hard for people to understand that, especially when there is so much news and information about how expensive it is to borrow right now, how expensive the housing market is. It seems like all of that input has this negative impact on our perspective and our hopes and dreams moving forward. But the folks who actually do the math and get down to brass tacks find ways to do it, and you can too. And so that's what this episode is all about. It's geared towards making this dream a reality based on what it is you have today.
Yeah. The right time to buy a house is whenever you're ready. You can't necessarily just wait for the market to dictate that to you, because you could wait and maybe by the time you wait, you have no choice. You are, you're moving jobs, or you are expecting a child, and now you have to wait when perhaps you were ready earlier and you were just waiting for the housing market to crash or interest rates to drop. But I always tell my clients the best time to buy a house is whenever you're ready. And that's totally different depending on who you are. If you're someone where it's really important that you have to have 20% down, fine. But if that's not how you have to buy a house, maybe you're ready now.
And here's the deal. Perhaps you aren't ready today. Perhaps you go through all of these steps and you learn that you need some more time to show that you've been working for a company for 2 years, or you need some more time to build a bigger down payment. And all of the things that we're talking about will get you ready for that purchase, whether you start today or you start 2 years down the road. The steps that you take initially actually help to kickstart that whole journey. So my suggestion to my clients is, you don't know what you don't know. So the best thing to do is to do a little bit of research, and everybody's journey is going to look differently based on your finances. So one of the first steps that I recommend to people is finding an agent, because that won't cost you any money up front.
Nope. You can interview agents. If you've got a friend or two friends that are agents, reach out to them and say, hey, I would love to chat with you about the home buying process. And that is every agent's dream, because that's what we get to do all the time. We get to have a buyer consultation, which is the best way for us to meet potential clients, or even explain to close friends who, know you're an agent, but don't actually know the buying process. So that is your best opportunity to meet an agent or at an open house, but they're going to want to sit down with you and have a buyer consultation.
And a good agent will continue to update you on how your market is doing. So let's say you meet with an agent in January, but you don't actually purchase until September. Well, our market has a lot of seasonality in it. So during those months in between, a good agent is updating you on, okay, these are the areas where we're seeing multiple offers, or these are the areas where we have a lot of inventory, so there's more deals to be made. And that will help you gain the knowledge and the confidence to make that next step.
Yes, absolutely. So we're going to kind of start with first steps here. So we talked about meeting with an agent. Right off the bat,
can I back up?
Yeah, back it up. Back it right on up.
So The other thing I want to point out is that we as agents don't get paid until a deal closes.
Yep.
So don't assume that just because you're meeting with an agent today that you owe them anything but your time.
Correct.
And if you have time, great. Establish this relationship, build trust, help them understand what it is that you're looking for, because they're not going to take any sort of commission unless there is a sale. And it's at the end of that sale, and it is determined by what the sellers are willing to pay and what you have agreed on in your buyer brokerage package. So I give my clients a range of what I charge that we agree upon before we start looking at homes. And then when we go into the homes, I will tell them, oh, this seller is willing to pay a buyer brokerage commission of this amount. So if there is a difference, they know going into it, if I'm going to write an offer, I might have to come out of pocket to pay this agent. But more often than not, our buyers are not paying out of pocket for services.
Right, and that's something that I think gets confusing because there's this adage that a buyer's agent is free to the buyer. Well, yes, it might not be coming out of your pocket, but the buyer purchasing that home is funding the whole process for, one, the home to be sold, two, the seller to have some proceeds, and three, hopefully the dividing of that proceeds is going to cover that buyer brokerage agreement. So it is because the buyer is purchasing the home, all of this is able to happen, but hopefully it's not just cash out of your pocket to the buyer unless you have agreed in your buyer brokerage agreement that if there is a shortage between those two, that the buyer is going to be responsible for that delta.
But those are conversations we're having along the way, every step of the way. So I never want my clients to feel like there's a, gotcha.
Yeah.
I gotcha moment.
And when we show you the house and you know you're going to make an offer, we're going to say, hey,
this is what it's going to
the seller is willing to offer this much.
Right.
That you're covered, or this is the seller's willing to cover this much. Here's the difference, and you're going to know ahead of time. It's never going to be a surprise.
Never a surprise. Same goes for loan officers.
Correct.
So
I had this question asked of me yesterday. How do loan officers get paid?
Right. The next step in the buying process is really figuring out what your budget is. And if you don't have any money, you can still go to a loan officer and start to make that budget with them. And they will follow you along that journey until you're ready to purchase at no cost until a house is purchased.
Yes.
And then there will be fees associated with opening that loan and establishing who pays for that. But those will also be documented out for you so that there's, again, no questions.
Yes. You will be given like estimates of what is owed. This will all be very transparent prior to closing. But like overarching, nobody in real estate on our end or loan officer side will get paid until the home is actually purchased.
So how do your buyers find loan officers?
You talk to your real estate agent. That is the best first step. Unless you happen to have a friend who's also a loan officer, great, chat with them. But your real estate agent is going to be a great resource for you for loan officers because we have worked with many loan officers. We have relationships with them. We know how they communicate. We know how they communicate with our clients, most importantly, because you want to find a loan officer that is not only going to kind of speak your language and understand where you're coming from, but is available to you when you have questions, because inevitably you're going to have a question at 7:30 p.m. on a Sunday or a Saturday, and
let's be real,
they
you
can
guys.
answer that for you.
There are some great loan officers and there are some not great loan officers, and that can make or break a deal. So what Sarah's talking about is we refer out business to folks who we know can close on the home.
Yes.
And that we don't have any questions about whether or not our clients are going to be left out and if their earnest money is going to be protected because they were able to meet those financing contingencies that were put into place. These are people that we have seen it through to the end, and that's a big deal. So if you don't know anyone, I would really recommend you reach out to somebody who does and who has worked with these people in the past so that they can assure you that this person is the right person and get you across the finish line.
Yeah, it's just as an important relationship with your real estate agent as it is with your loan officer, because you're going to be communicating with your loan officer throughout the entire process.
Can I also just state that we don't make money by referring out loan officers. There is no proprietary agreement going on between us as the agent and them as the loan officer. So whatever loan officer that you decide to work with, it won't hurt our feelings. It just we might not have the same amount of trust in that individual as you do, which is fine.
We just have to build that up. I've worked with new loan officers because my clients have already, had an arrangement with them, and it takes a little bit longer to get that relationship going, and then, all is well. If you trust them and you're comfortable working with them, send them our way, and we're happy to work with anyone that you've already established, a relationship with.
So when you meet with these loan officers, what they're going to do is they're probably going to ask you for your tax returns from the last 2 years and documents proving that you have some sort of employment. So the bank wants to make sure that you're able to afford these mortgage payments, and the only way to be able to show that you can afford them is that you have a steady amount of income coming in. They have other ways of qualifying buyers as well. So if you have stocks and you're making money off of that, there are other ways to look at the balance sheet and see if you qualify. But they're going to want kind of some rough estimates of how much money is coming in and how much is going out, so that they can kind of give you this guideline as to what you can afford and how much those mortgage payments are going to cost you every single month.
Yep. And they're really great about helping you figure out what work you might need to do possibly before buying a home. They're going to look at your finances and be like, hey, here's an area I think we can work on. Instead of maybe putting, this cash that you have for your down payment towards this, maybe put a little bit over here and pay off this debt, and that's going to help you in this other way that they can explain much better than I can.
Yeah, your interest rate will be better if you don't have a car payment.
They're going to they can help you figure out your debt to income ratio a little bit better and figure out how to maybe strategically use the money that you have. So it's not just about like, here's your mortgage, you can buy your house. They can actually really help you better position you to buy that home. So reaching out to them before you're even ready to purchase is an amazing first step to take.
Kind of like a free financial planner.
Exactly. I mean, really, it is.
Kind of.
Yeah. They're going to help you pave that road to buying that house.
Yeah.
Whether you want to buy, in 6 months or a year, they can be like, great. You want to buy in a year? Here's some steps to take for every month for the next 12 months to get you there. So, that's free. Reach out to them.
Yeah.
It's great.
Okay. The last thing that you need to hone in on is where you want to buy a house. There are some individuals who are so focused on the price point that it really doesn't matter where the location is. And that's an investment purchase. That's different than buying your first home. When you go to set out and look out for homes, you're going to want to be able to map out that area. So if it's new to you, having some time spent driving through those neighborhoods and figuring out how far is this from my work? Is it feasible for me to get there? What neighborhoods are drawing more offers than others? Where do I need to be competitive? Where can I get a sale? What neighborhoods do I think are going to appreciate and value more? I don't know if you ever watched the Chip and Joanna show.
Yes.
The worst house in the best block, right?
Yeah.
That was their whole strategy.
Yeah.
That is a strategy that you can utilize here too, based on where you work and kind of the constraints of your job.
Yeah. Absolutely. I have some clients who are even a little bit more broad, and they're like, I want to be 30 minutes from downtown in any direction. And then they start to narrow that down. They're like, actually, I want to be 30 minutes north or east.
Right.
And then you kind of hone it into a specific location. But we kind of like put a dot and drew a circle, and we were like 30 minutes in any direction will work for us.
And go explore those neighborhoods. See where you feel the best and the safest and the most comfortable, because we can't steer you in one specific direction. It's not great for equal housing. It's not great for our clients. All we can do is go off of the information that you're giving us. And the more precise you can be, the easier it is for us as agents to kind of hone in on, okay, not this one, but this one, and make sure that you're not becoming overwhelmed by the process. I think oftentimes people believe that having more options is better, and a lot of times it makes it more complicated.
Oh, we've said this before. Knowing what you don't want is equally as important as knowing what you do want. Because if you tell me that you don't want, X, Y, and Z, and you send me a house and it's got X, Y, and Z, but it has all the other things you love, I'm going to remind you that these 3 things over here you explicitly told me you didn't want.
Right.
So know what you do and know what you don't.
Know what you do and don't. Yeah. Okay, now that we found the home, the next thing that you can expect is to be able to write an offer. And in order for us to write an offer, you do really have to have a loan officer if you're using a mortgage, because we have to have that golden ticket pre-approval in hand in order to write that offer. And you need to be ready to move within 30 days.
Yep. I mean, those timelines can change a little bit, but like typically you're going to be closing on that house in 30 days, maybe or less if it's a competitive offer. So if you've got your loan officer in place, that your application is started, your file is already underway, which means that the process of actually closing is going to be that much faster. It's going to look like a lot of paperwork up front when you start speaking to that loan officer, and it's going to make the process of closing so much quicker.
Yeah, I have a lot of clients who get really frustrated about how much information that loan officer wants in the beginning. And that is just kind of preloading the work. So when you're not actively writing offers, that's a good time to give them as many documentation or documents as you can, because once you are under contract, then it's go time, because you really have to have it all under wraps within 3 weeks that the financing contingency is null and void.
Yeah, because this is how this protects your earnest money, right? Everything we put in an offer is always there to protect your earnest money. So if you've got your financing all set up, there's not going to be any hurdles you're going to be jumping towards the end, hopefully. And I will caveat that and say the reason there is so many documents that your loan officer is going to ask for is because they want to make sure that you are well qualified and they are not giving you a loan that you cannot handle. This is actually like for you as the buyer, your protection. Because as we saw in the housing crisis in 2006, 2007, 2005, and it all crashed in 2008 and 9, people were being approved for loans they could not afford.
And that's what got us into this situation in the first place. So it is a good thing. It does protect you. Oftentimes when we write an offer, unless it's like a very strong seller's market, we are writing in contingencies to help our clients protect their earnest money. So what is one of the contingencies that you use the most often?
Well, a financing contingency, since we've been talking about loans, a financing contingency is going to tell the seller, 1, you are getting a loan. 2, it's going to tell them how long you have to open that application after you go under contract. Now, if you have a pre-approval, that means you've already opened that application, and that also tells the seller, hey, I've already done these steps. I'm like well into the process of getting my loan. And it's also going to tell the seller how long the buyer has to get that financing in place. And it allows the seller to basically check that you have done that in fact, which is an important step for the sellers as well, to make sure that they know that the buyer has actually followed through and is going to get this loan. But that sort of protects your earnest money, because if for some reason, outside of your control, you do not qualify for your loan, say for instance you lose your job in the middle of being under contract and you can no longer afford that, you're going to get a note from your loan officer explaining that to give to the sellers, and that allows you, if your agent has put that in your contract, to get your earnest money back. You are legally within your right to do that if you have a financing contingency in place and for no fault of your best efforts in trying could not get a loan secured.
And let's talk a little bit about what earnest money is, because I think a lot of people conflate that with the down payment that you're going to make when you first purchase it. So earnest money is a portion of your down payment. So think about, like, let's say that you want to buy a $100 home and you've decided that you're going to put $20 down and the bank is going to pay the other $80. We're playing Monopoly money here now,
I'd
folks.
love to buy a house for $100.
Right? So that $20 that you're putting towards the purchase of the home, a portion of it you are going to give within 3 days of writing that offer. So I always tell my clients, if we're going to write an offer, you need to have this earnest money that you're going to give them within 3 days of us writing that offer, because that needs to go to the sellers to show them, yes, I am interested. Yes, this is how interested I am. I'm so interested that I'm willing to give you 5 of my $20 up front because I know that I'm going to move forward with this purchase. And the title company, not the sellers, are going to hold on to that until the end of the purchase. And if anything happens with the purchase and it gets terminated, ideally you would get that $5 back so that you could do that $20 down payment on another house.
Yeah, you want to keep protecting your earnest money, because if for some reason that this doesn't work out in this house, you can go on to maybe purchase another home and you're not constantly losing bits of your down payment.
Right. So the contingency that I use the most frequently is probably the inspection contingency. This is really useful if a home is on the market and has not been inspected. It actually gives the buyer a whole lot more freedom to renegotiate, because you can send your inspector in there and find out, oh, well, the roof is about to fail, or I have a furnace that's over 30 years old, or there's this really unsafe portion of the deck that needs to be replaced. So once we have that information, then we can go back to the sellers and say, we really still do want to purchase this house. However, in order for us to feel safe about this purchase, we would like to have these certain items fixed, or we would like to reduce the amount that we're paying because we're going to come into the house and have to have these certain items fixed.
Yes.
So that gives you a whole lot more power to renegotiate the terms of the deal.
Yes, and that contingency in itself was a little bit of a negotiation, maybe even before your offer is accepted, because there might be a back and forth of how long the seller is comfortable that for the timeline that you would like to have that inspection happening. So it's all a little bit of a negotiation, even maybe before your offer is accepted, but certainly afterwards, of course, because there's a little bit of back and forth that happens within that inspection contingency. A way that it can also really protect your earnest money is, say you go in and you find something that is big, hairy, and scary and you do not want to deal with, and it makes you want to back out of that home entirely. If you are within your inspection contingency timeline, you're well within your right to back out. Don't have to tell the seller why, and your earnest money is protected and can be refunded to you. So
Yikes.
Yeah, so contingencies, we kind of think of as, they are
Backup plans.
Backup plans and protections for your earnest money. That's really what they are. So important to have those and to know why they're in there and how long each of them last, because contingencies can have different time frames, and that's kind of a strategic point for both the buyer agent and the seller agent to really understand.
Another one I like to use is an HOA contingency. So sometimes we will have access to all of the HOA documents prior to writing the offer, but sometimes we don't. And those HOAs kind of give you a feeling of how well the community is surviving based on how much they have in reserves. So it might be that this condo looks really great and lovely, but then we go to the reserve study and find out that they are millions of dollars under budget for fixing and updating pieces of the property itself. That could signify to the buyer that potentially there might be a special assessment down the road, which could be, $100, or it could be tens of thousands of dollars. So I always like to put in a HOA review period if we don't have that information and we're not ready to kind of make a decision up front.
It's kind of like an inspection of the HOA, if you will. Helps you look into the numbers and see a little bit under the hood there and understand where your dues are going, because that's a big portion of owning a condo, is where your dues are going.
Yep. Okay, so after all of those contingencies have been met and we still want to move forward on the purchase, it's really just a waiting game.
And what don't you do during that waiting game?
You sure as shit don't buy a car.
There you go. You sure as shit don't buy a car. Oftentimes when people are kind of like getting ready to nest in their home, they want to make some big purchases, like big furniture items and put lots of things on their credit cards, and don't do that, because your loan officer is still going to be looking at your finances, making sure everything's the same and consistent through closing so that nothing has changed and you're still qualified to close on that loan. So like, yes, you know, buy a few things for the house. Obviously you're going to be
pillows are fine.
You're going to be prepping, but
Couches.
do not go take out another loan and try to buy a car. That is not the time to do
Or a
it.
hot tub.
Wait till your house closes.
Yes. Yeah.
Wait till your house closes. You want to keep everything even keeled
You know, make a Pinterest board.
of what you're going to buy on day
of all
31.
the things you want to buy, put it in a vision board, but don't actually execute on it until it's done.
No, don't do that. You want to keep everything the same.
Yeah.
And one thing that you are going to be able to do as the buyer is you're going to be able to do a final walkthrough, which is a really great opportunity to go back to the property. Usually, 5 to 4 days before closing, enough time that if something needs to be done, the seller can take care of it. And you can look at the home, make sure the home is in the exact same condition as it was when you went under contract. And yes, that does include the bushes in the front yard. If they're dead, the home is not as it was. So sellers, make sure to keep your home in the same condition it was when you went under contract. Water the lawn, please, dear God. I've showed up to closings where it was the only house on the block where all of the vegetation and the grass was completely dead. And thank God my clients were like, it's fine. We love the house, right? You're not always going to get that.
So then once you've done your final walkthrough, you've decided that everything looks good, then it's just waiting for title to issue the numbers to the county so that we know that it's closed.
Yes, and once it is closed and recorded with the county, then and only then, it is officially the buyer's home.
And we can give you keys.
Yes.
But please be nice to your real estate agents. We really don't know how long the county's going to take that day. It's not going to happen on a scheduled time. So we are told that we get keys by 9 o'clock that evening.
Yeah, technically the seller has possession until 9 p.m. unless otherwise discussed between the two parties, and that has been all agreed to.
So just expect later in the day, on that day,
Yes.
it'll be yours. And then it'll be yours until you decide to sell it.
Yeah, exactly.
Forever and ever.
It's a great, happy day and a wonderful time to celebrate.
So if you're interested in having a buyer meeting and listening to what it is that Sarah and I can offer, we would love to sit down with you. Just hit us up. Otherwise, have a great day. Bye.